like everyone's been being entered in right now. Let's give a minute. Perfect. Welcome, everyone. All right, I can kick us off real quick. My name is Mitch Kochman. I'm Chief Revenue Officer at Onramp, and personally was responsible for leading our search with finding the lending partner we were going to market with to do Bitcoin-backed loans. We launched the partnership, I think it was back in February, and demand has been very heavy. But more importantly, we've been absolutely thrilled with Arch and service they've delivered to our clients, and just you know, the white glove service that our clients are familiar with working with OnRamp. We've certainly seen with the Arch team. So I'll give a minute, let Himanshu introduce himself. I'll talk a little bit about what Arch does, and we can get into the agenda for the webinar.
Thank you, Mitch. Hey, everyone. My name is Himanshu. I'm one of the co-founders here at Arch. And Arch really has our flagship product as crypto-backed loans, specifically Bitcoin-backed loans. So as Mitch mentioned, we've been working together for a couple months now. It's been a very fruitful partnership on both sides. And I think some of the points that both OnRamp and Arch align on are what makes this partnership work for both of us. Is the fact that we focus heavily on security, transparency, and trust. And we'll talk a bit more about how we demonstrate that through our product. And then we also focus heavily on white glove service, which I think OnRamp feels very strongly about too. So we've had this partnership going for a couple of months. We've had a lot of demand, and we'd like to continue to serve that demand and ask the questions. Really, this is meant to be something where it's an open book for everyone to come ask whatever they feel strongly about or concerned about, and we'll try to answer the best ability here.
Perfect. And I'd say primarily, I've taken a lot of client calls, and it's aligned with very much with our search criteria for who we were going to market with our lending partner. The primary concern with how lending in our space and the track record we've seen was making sure our clients hold on to their Bitcoin at the end of the day. And while I'd much rather pay a higher rate for a Bitcoin-backed loan with client protections to ensure that the loan actually goes to term. And if I'm using my Bitcoin to go buy a house, that's it's a loan I can rely upon without loss of collateral, with going to the full term of the loan. So to get a little bit into what makes Arch different and why we chose them. Number one was zero rehypothecation. All of our clients have segregated on-chain addresses that to hold collateral for the loans. But then, my background is infrastructure. I came from BitGo. I came from IBM before that. My fascination with the product is that seemingly every infrastructure decision that Arch made was to protect the borrower. And they're one of the only firms in the space that does term loans. So you can do anything from, I believe it's a 1 month loan to up to 2 years, but you're locked into your rate. That loan won't be called. If there's an FTX event that occurs, your loan's still going to term. It's not, many of the other companies in the space could call back a loan, close it, and ask to go bring those dollars back. So what does that allow you to do? Like I said, buy a house, go pay your taxes, make life decisions with that Bitcoin, that you don't have to worry about volatility or events in the space. So that's on the term side. On the infrastructure, funds are held at Anchorage, bankruptcy remote entity, with insurance. I believe the figure is about $100 million for loss and theft of private keys, and that's on a per wallet, per incident basis. What does that all mean? If they lose the funds, the insurance policy would kick in. But more importantly, if Anchorage were to go bankrupt, funds are protected in a bankruptcy remote vehicle so that your funds still remain your funds. Anchorage would continue signing through a bankruptcy, and those client funds are protected outside of bankruptcy proceedings. Separately from that, on, while we don't want to talk about it much for, for our clients Bitcoin, it is important that whoever's giving you a loan it has the ability to go liquidate. Because what does that do? It protects, it protects the lender, and ultimately make sure that loans aren't going underwater. One of the things I like about we've been through margin calls for our clients. There's definitely a partnership, um, with us, with the clients, where Arch isn't looking to liquidate anybody. It's not in Arch's interest, it's not in our interest, it's not in the client's interest. So as long as the client is moving over, Bitcoin at the margin call levels, there's communication that takes place. We certainly will hold off liquidations. But that said, once certain thresholds are, are breached, Arch does and will top you back off to, I believe it's 60% LTV. But there's a backup liquidator as well, with Galaxy. Should Arch make a mistake, and that's what I wanted to get to for the infrastructure. There's fail safes in place to make sure those loans don't go underwater. Galaxy can step up and liquidate and do that partial liquidation on the loan. And then lastly, heaven forbid a loan goes underwater. And this is one of the things I like most about the offering, because things do go wrong. There could be ugly candles. There could be things that happen. The um, the borrower is actually protected in that scenario, and the lenders, to take upon the responsibility with the CLO, to take upon the risk of that underwater loan, and the borrower is protected in that environment to still have their loan to term, and no risk to their collateral. Going through that, just at the extensiveness that we did, because that's the rigor that we went through to when we were searching for that partner, is ultimately, we have a brand that we want to be in the space for a very long time. The multi-institution architecture that we go to market with it's an environment that was put in place so that your Bitcoin can get passed down to your heirs, and uh, it's with a long-term mindset. We can't align our brand to another, on the lending side, that might experience a loss of funds or some sort of catastrophic event. That's why we talked to everybody when we landed on Arch. So I'll pause here. I'm not sure, Cam, if you want to jump in. I went through quite a bit there.
Yeah, I'm just gonna add a couple of bits of information, and I apologize if it's information overload. But a few things to add to what Mitch said. So on our loans, we found that term is quite important to a lot of people because people are really using this for real world use cases. And as Mitch mentioned, it's buying real estate, investing in their businesses. We have people that own irrigation businesses, solar businesses. They invest in other kinds of assets. Maybe they're big purchases. And really, for all those people, and I'm sure there's some people in this room who fit in that bucket. Borrowing for a year doesn't really move the needle. So you can actually borrow for 2 years, but at the end of 2 years, you can roll over into another loan without paying back the principal and just keep borrowing. So in the private banking world, when you have a lot of assets, what do? You go take an ELOC and equity line of credit against your assets, and you do the buy borrow that strategy. You don't pay it back until eons in the future because you're getting that liquidity against your assets, and you're just paying the interest rate without paying back principal. So that enables a lot of liquidity to be used for a longer period. The other thing is, on the flip side, if you do want to end your loan early at any point, let's say you're 6 months in or whatever that time period is, um, you close the loan at that month, there's no penalty, and you don't owe us anything beyond that in the future. One thing that Mitch touched on very briefly, but I think it's important for this context, is how we raise capital is different from other lenders. So Mitch mentioned the CLO. The CLO is our collateralized loan obligation facility. It's how a lot of debt is raised in traditional markets, not really common or actually never done before in crypto. But what that enables is we have a long-term debt facility, much longer than the 2 years that we offer on the term. And we never have duration mismatches or issues like other lenders in the past that have failed had. So as a result, we don't have the ability to call capital, and we have long-term scalable capital backed by like much bigger traditional Wall Street and other firms here. So that's all to say that our focus really is on enabling long-term stable use cases against your Bitcoin. And then finally, just to round that out, we strictly do not rehypothecate capital. What that means is we will never take your Bitcoin and use it for something else to get yield or anything. In fact, over 100K and even buy it below 100K, our collateral is segregated in a separate register for you. The risk is shared with you, so you can verify it at all times that the assets are never moving and they're sitting there exactly where we said there.
Perfect. So I know we've given a lot of content here. I'm looking at the names. We have some existing loan clients. We have some that we've talked to. I want to just pause and see, on, as far as the audience. I've got frequently asked questions that we can certainly hit on. But are there any audience questions that you may either want to type into the chat or raise? I can peek here. Um, I'll give one to Himanshu. One of we've released a piece on this, I believe it was 2 weeks ago, but one of the common questions we get is on the 14% rate, and why that's higher than a home loan or federal funds rate. If you want to get into a little bit of the explanation why. You're on mute, I believe. Yeah,
There we go. All right.
beautiful.
So a few things. One, in our opinion, and I think this will come to fruition over the next year or two, Bitcoin is pristine collateral and it's priced incorrectly at the moment. So us as a vendor would actually agree with borrowers that say that it's too high at the moment. Uh, Given the fact that Bitcoin, in our opinion, is pristine collateral, 3.7, 365. However, um, other loans in the space are also kind of at the rates that we're kind of charging. So if you go take a personal loan today, that's going to be in the teens. Mortgages are at 7%, and like the federal funds rate is four and change right now. So our cost of capital is a function of the federal funds rate. It is important to keep in mind that Bitcoin-backed loans as a concept is very new. Bitcoin has existed for less than 16 years, which in the grand scheme of things is a very new asset type. It's something that people are still coming to terms with and understanding. Uh, so lending against that or any financial products against that are as a result very, very new and haven't been caught up to by traditional large pools of capital. That is changing. And I will say, maybe in this call, our costs are coming down over the next few weeks, and then we'll continue to over the course of the next year, as we've done some things to bring our costs down on the CLO facility that we have, which actually is going to be how I think we end up to a point where the cost of a Bitcoin backed loan looks not much different from maybe a point or two above a mortgage, at least in the US. Another thing to keep in mind is we've been in an artificially low interest rate environment for much of the last 15 years, except for the last 3 or 4. Um, the federal funds rate, which is like the base rate that banks borrow at, has historically been much higher than the low single digits we've been experiencing. Mortgages in 2000, 2001 were well over 10%. And we've gotten used to kind of this low interest rate environment, but in fact, that's not always been the case. And finally, if you look at what you're actually borrowing against, your CAGR against Bitcoin over the last 5 year period is 62%. So really, your asset that you're using to collateralize is appreciating much more than the interest that you're paying. So you are, even if you don't do anything with that money, you are net positive in just the asset that's appreciating. Having said that, obviously, we don't want you to sell your collateral to close the loan. No one wants to sell at that time. So just to keep in mind that the CAGR in Bitcoin is much, much higher than the rate being charged here. And CAGR stands for compound annual growth rate.
Appreciate it. One of the common situations that I've run into. Oh, looks like we do have a question. Angelo, do you feel free to either type into the chat or Jackson if you'd like to, um,
Yeah, I can quarterback some of these questions here.
Sure.
So let's speak to this one first. Is the Bitcoin held as collateral kept in a separately verifiable address, or is all client collateral mixed together?
Yeah, great question. I'm gonna hit the answer live button so everyone can see it. So the Bitcoin is kept in separate addresses, so in separate wallets, segregated by a borrower, actually by a loan, above 100K loan size, below 100K by request. We also separate it, and then the address where it's stored is shared with the borrower within 24 hours and then kicking off. And we've done that for I think most of our all on-ramp customers so far.
Yeah. Anything, Mitch, you'd want to add there? Or should we get to the next question?
We can go to the next question.
So I saw one specifically around New Jersey. Is Arch lending available in New Jersey? I believe the answer is yes. And then maybe Himanshu, could you speak to just obviously we don't need to go into every state, but just generally how many states are covered from like an individual or corporate perspective? And then how do you typically work with clients if you cannot support their state at the moment? And then also, in addition to that, international once you get through the domestic.
Yeah, that was all the questions actually. So around licensing. So I'll take it one by one. Yes, New Jersey is supported for both individuals and businesses. We are live in 33 states for individuals, 42, I believe, for businesses. I can double check that. We have applied for all licenses in the US, and we should have full coverage except for California by the end of Q2. So very, very soon. We'll be getting licenses like on a weekly basis at this point. Um, we will get California by Q4. It's just a longer process. And then international. So we are live in many international countries. I think the number of customers we've had so far have been live internationally. The only caveat is we lend in USDC typically internationally. We should have even more international coverage with a foreign license we're acquiring at the moment. And then the last question was, what if you're in a state that we don't support? So we've actually helped a number of borrowers, especially in the US, who in states like California that we don't support today, open up an LLC in another state. The popular choices are Nevada and Wyoming, and we'll help you guys open that. It typically takes a couple of days at the higher end, and we have people do that almost on a weekly basis, if not more.
Yeah, that's perfect color. And so one thing to just mention there as well. So liquidity can be provided in dollars or USDC. And then Himanshu, as you mentioned, internationally, it's USDC at the moment. Could Himanshu or Mitch or Cam for that matter, since you've all worked with loan clients at this point, speak to just the process of getting this set up? Like how long does it take to do that from actually configuring the loan to doing the KYC and all of that to getting the liquidity?
Yeah,
I can go.
how much why don't you start from kind of the process, and I can share some client anecdotes I've had that are fun to share.
That's perfect. Yeah. So, um, I mean, if you want to take a loan, we can have it funded while we're on this webinar, just to make a long answer short. But it's very simple. You create an account. Everything in our system is fully automated. Everything from origination, KYC, loan servicing, margin calls, etc. So you'd create an account. You get dropped into the calculator. You can figure how much Bitcoin you want to use as collateral. The next step will be to choose whether you want to get paid in dollars or stable coins. You can connect your bank account at that point to get paid in dollars or paste your stablecoin wallet address. Then there's a quick KYC step. If you're doing it as an individual, it will take you a couple of minutes. Add 5 minutes if you're doing it as a business, just to upload your documents, etc. And yeah, and then it's signing your loan docs. It's an e-signature online in the dashboard, and then you send collateral. As soon as collateral is received on our end, your loan will get dispersed in your preferred method of disbursement.
Yes. So like I've been amazed myself to see it, and then my clients have too, like how simple it truly has been. Like you guys have created a beautiful dashboard, very simple. And the speed to access liquidity is really one of the biggest reasons that people take out a Bitcoin backed loan. And so for some context too, I'm Cam Stromey, head of private wealth here at Onramp, and previously I worked at Unchained Capital along with Michael Tanguma, who's Onramp CEO and co-founder. So we have a lot of experience in how to run a Bitcoin backed loan product the right way, which also made it easy for us to rally around picking out Arch and partnering in the market because of this, all these principles which we had rallied around it previously, and then kind of took as table stakes: no rehypothecation, conservative LTV rates, really just being prudent with the custody, and then being engaged with your clients in those margin call scenarios. So more context I can add there, but I would oftentimes even have clients who could access capital at lower rates, but the process would be multiple weeks, right, through a bank, through a traditional application. So that is certainly one of the advantages of Bitcoin-backed loans, even at higher rates relative to other forms of capital, that you can access. Oftentimes, I think the standard is probably within 24 hours. I'm going to hold your team to a higher standard with some of these anecdotes, Himanshu. But I had one client who started applying for the loan at 11:30 a.m. his time, and then he received funds in his bank account by 3 p.m. that same day. And even the fact that you're able to onboard businesses same day is really impressive. Where typically onboarding a business entity with any institution, any financial institution, is a headache. It's a multi-day process. There's just more paperwork involved. So really a testament to the flow that you've created for onboarding, the client service along the way, and then the speed of execution.
To echo that point a little bit, but I'd say I run into a lot of client use cases of, I'm going to be buying a home in 2-3 months, and I'm looking at the various options, or I want to go buy Bitcoin, and leverage my Bitcoin, and I'm waiting for the right price. There are many situations that someone may not be ready to go execute a loan. But our recommendation, and we've seen it, be successful for our clients, is go sort of grease the wheels a little bit and go take out the first loan and get comfortable with it. Do the onboarding, get everything in place, get comfortable with sending to the address that we give you for the segmented address. Get comfortable with seeing that on chain, receiving the USD or USDC. Get all that in place so that, number one, particularly if you were looking to buy Bitcoin, you can go do that quickly. Not that the onboarding is slow, but you can go take advantage of that situation a lot faster. Or number two, particularly with the stresses of buying a house, which is a very common case that we've seen, go through that process and get the some of the uncomfortable feelings that you might have out of the way of getting this stuff set up, so that when you're talking about moving and your contracts for houses, like, you've got this stuff sorted out. And we've seen, and I've watched it, of client take out a $5,000 loan just to kick the tires on this, and then bought the house 2 months later. So definitely recommend trying out the product and getting comfortable with it first, if you got something in the next couple months around the corner.
Yeah, just to add to that, it's actually very simple to add on to your position and borrow more. So there's an upsize functionality in the dashboard which works in 2 ways. One, you can always add collateral to your loan and then just borrow more against the additional collateral. Or two, as Bitcoin appreciates in price and your LTV drops, and this actually answers Scott's question as well. So your start LTV is 50%. On request, we could go a little bit higher if that's of interest to you, but it's 50% to start. And then as it goes down to 40%, you can, within 2 clicks, go borrow more with the same amount of collateral and get back up to 50%.
And then importantly too, you can also request collateral back. Now, right, if you started at 50% loan collateral, the price of Bitcoin appreciates. Now you're well over collateralized at a 25% LTV. You could keep it there and just be extra conservative, or you could say, you know what, I request some of that Bitcoin back for your own purposes.
Exactly.
Could you guys speak to how people will typically pay their loans back? There's one question about if paying loans back with Bitcoin, does that incur a capital gains tax? Obviously not tax advice, but could we speak to what you typically see in terms of client behavior, how these loans are paid back, and then also answer the question on the tax side?
Yeah, so that's Jacqueline's question. We don't accept payment in Satoshis. You would have to pay us in dollars or stablecoins. And a loan is not a taxable event, and also paying us uh, is also not a taxable event. The only taxable event does occur if there is a liquidation, a partial liquidation, as we do. Um, and in that, we'll give you a schedule to use in your taxes, just like you would get from a Coinbase, for example, or from. I actually imagine you guys actually do that a lot better, given that you guys are trading like both of them at Onramp.
Perfect. This is an easy one. To both businesses have human customer service. So yeah, I mean, that's something we certainly pride ourselves on here at OnRamp, just in terms of having a very personalized relationship with our clients. Always easy to get a hold of, whether it's by phone, giving us a call, or email. You can always reach us directly. And Arch has been the same way, just with the clients I've worked with on Bitcoin backed loans. The Arch team has been instantaneous in their responses and also available to speak to our clients directly as well as needed. So I would certainly say with both of these businesses, we take the client relationship very seriously. It's always a point of differentiation and just want to do best by our clients.
Yeah, so not only is there a human client service and it's some of the best in the industry, if not the best, but you also have the benefit of two teams helping to support through that loan process, which is unique, right? Like oftentimes clients may start speaking with OnRamp with me, Mitch, Jackson, but then they end up talking with Himanshu or Freddie or different members of the Arch team, and then we can both help to support throughout the process. So high level of availability there.
Speaking about the support, just one feature I've liked a lot on both the deposit of collateral and also if the loan's in USDC, you can do test deposits on both sides of a transaction, and wait for that to hit, and you see it in the Arch dashboard when you're depositing collateral, and then additionally, for the loan proceeds when they've been in USDC, the Arch team will send a test deposit if the client wants one, and it's verified, by us, by the end client before sending the full balance.
Yeah, and I think you guys have actually been pretty good in verifying the collateral addresses that like the contract on from OnRamp. So there's like a double layer of confirmation that the full funds are ever sent to us.
Yeah, right. That's a good point too. That definitely been on video calls with clients before if they want to be on a call with me, share their screen, send a test transaction to their loan address. I'm helping to double check the address, helping if they run into, I can help to troubleshoot issues if they're sending from a hardware wallet. I'm familiar with practical softwares that they might be sending from. So really provide a white glove service throughout the entire cycle of the product.
So what happens if interest rates do lower in the future? So how would that be handled for clients that have an existing loan out? Could like how does that impact their current loan and their ability to roll over to a lower rate?
Yeah, so rates are locked in on the loan when you originate it. However, if you do roll your loan over into a new one, that will be at the prevailing rate at the time. So imagining rates are going to be lower, you will roll over at the new rate, as well as any additional funds you take on the existing loan. Let's say you're upsizing or adding collateral and taking more there, it'll all be at the lower rate. And then the current loan can, in certain cases, be refinanced, but it's really towards the end of the loan cycle. But yeah, a rollover is a clean, simple decrease rate, as well as an upsize. Mitch, I think there's a question for you from out from the girl.
What was that?
I believe there's a question for you there as well.
Yeah, I
This
can
question.
read it out. So could you compare yourself and provide some perspective to Ledin? So this client's specifically asking from a Canadian corporate perspective, but perhaps we could share overarching just some color on how you think about Arch in the competitive landscape for Bitcoin-backed loans. And then Mitch, you were specifically called out with your background from BitGo as well, just in terms of if you have any thoughts on the custody side for Ledin's product, if you're comfortable speaking to that.
Sure. Look, on the custody side, they do use BitGo, my former firm. I think both BitGo and Anchorage, which are the two custodians in question here, both have different strategies for what they, how they actually store those keys, but are both outstanding, fantastic custodians. So, perks to using both for sure. When comparing the two products, I don't think either of them are, you've got a detriment. It's more of a preference, with what activity you're using it for. BitGo's more of a deeper cold storage. Anchorage is a faster signing technology, which is helpful on a loan product, often because being able to handle something like liquidation. So, like I said, there's perks to both. Both firms have been around for a very long time. Both are insured, and I think will continue to be around for quite some time. I on the lead in question in general, Himanshu, do you want to speak about it, or do you want me to? Because
I'll let you go, and then I can speak to it after Jennifer.
for
I
sure.
definitely have I get asked this question a lot, but you go first.
So I think we analyzed the space, and I think one of the primary concerns we had, if our focus was making sure our clients' Bitcoin remain theirs. So what we worried about, things like rehypothecation, and ultimately, Ledin has a couple of different products, and some of them they're using, might be using client funds to go pay loans. Some of them are more open term products, and it was a bit murkier with while the Arch solution was certainly seemed a lot more bulletproof, and client collateral was segmented, was not rehypothecated every single time, and I've been in the room when FTX was going down and clients were getting margin called, and I saw open term loans get called back, and I think about when that was I was on an institutional side. For individuals, the clients we're talking to, when like I said, buying homes, or even if they're purchasing Bitcoin, I wanted to make sure that when our clients were forced with that volatility, dealing with that volatility, that we were going to be a place where they can go take that deep breath and say, all right, I've got my term loan, I'm in a pretty bulletproof vehicle here. I'm going to go worry about that volatility in other places, not necessarily with my loan. And ultimately, there wasn't a vendor in the industry that I could, that I had that confidence with, particularly for our client use case, which is, we're dealing with mostly individuals, small businesses, that, an institution, sure, they can handle an open term loan. They can go, protect against those risks. People in small businesses have different needs, and Arch was clearly a solution there. And I'm sure you can get more details there, and I can pass the mic over to you.
Yeah, I think speaking so from a British Columbia perspective, we support British Columbia. I believe we've actually had a borrower or two from there in our relationship here as well, and so there a few key differences. So in terms of the duration, right? So at Ledin, you get up to 12 months. You get 2 years, and you can keep rolling over to get much longer. And really, if you have real world use cases, people often want to borrow for longer than 12 months. You have the early prepayment, which we offer with no penalty at all. Ledin has a few other fees outside of just the APR. And also their APR is a bit misleading on the website. It's 12.4, it's actually higher. The 12.4 rate is for the rehypothecated rate. We strictly do not rehypothecate. So when they rehypothecate, they're actually taking the Bitcoin and letting it out further to make some yield, which is why they can give you a couple percent of funds lower on the road. So yeah, just a few key differences there. How we store assets as well. At Ledin, your assets will not be stored in a segregated fashion. So here they will. I mean, it's also a difference of who the borrowers are. So Lending's focus heavily is on Latin America, and their borrowers are typically borrowing 4 figures or low 5 figures. Our borrowers are typically borrowing high 6 figures, if not higher. We have borrowers in the on-ramp relationship well into the 7 figures. We have borrowers on our own side at well into the 8 figures as well. And we'll continue to see that growth to the later this year as well. So it's really like you're in a slightly more stratified culture with borrowers here. And then finally, how raise capital is very different from Lending, where they take different pools of capital from different structures and then they lend that out. So there's issues like duration mismatches. And when things go south, as Mitch mentioned, you really don't want to get your capital call when your assets are in free fall, or when the lender has a bank run, and they need just to claw back all the loans that they have because they need to pay other credit really well. So our capital is longer term. We don't have the ability to call capital on a loan at all. We also do not strictly have the ability to rehypothecate. All that's written in your loan docs that you will read and sign before you send us anything. So we make everything very, very clear at the start of any loan relationship here.
So I believe we've gotten through all the questions in the chat. Let's give, if anyone else has questions that haven't been answered, please feel free to submit those. In the meantime, as we give it another minute or so, are there any other critical things or frequently asked questions that we didn't cover so far?
Don't believe so. I know it's a little bit of a state-by-state basis, but how much of the minimum loan size for anyone who sort of just wants to get started?
Minimum loan size is $1,000. However, there are some states that require slightly higher loan sizes. I believe the highest you'll see as a minimum requirement is 25K. But it's typically much lower in most states. So if you want to come on to a test loan, we see that pretty commonly with people, so you can easily do that. And then all of these in the calculator, as you choose the state, you can choose the amount that you want to choose, like that you want to borrow. And if it is below the threshold, the calculator will tell you here's the minimum for the state.
One more note on that calculator, which I have enjoyed. You can onboard, you can go configure the loan calculator and see, all right, if I bring in this collateral, what does that mean as far as my monthly payments? What does that mean as far as the loan amount I'd be receiving? You can go through KYC. You can, and you have access to the calculator before committing to anything. So certainly, like I mentioned, is on kicking the tires. There's no downside to seeing those numbers and seeing what you'd be comfortable with, what makes sense for you. So certainly recommend doing so.
And then the other part of Dylan's question was, what are the specific things you need the loan to be for? So these loans are not for any specific use cases. You don't have to tell us what you're looking for. Often people may not even have a use case for when they're borrowing. So you can do it for whatever you want, as long as you're not a sanctioned individual that you want to use it for nefarious activities. But we'll catch that in our AML process, so that should be not an issue.
I've seen people who are just living off their Bitcoin and no longer want to, work, or they're looking for income without selling their Bitcoin. Seen buying houses, levering up. It's been I've enjoyed hearing the different use cases, and if you don't want to tell us, that's okay too.
Mm-hmm.
Yeah,
it's really up to the
you don't have to tell
discretion
us.
of a client, but you can buy more Bitcoin with those proceeds. So again, personal decision. But the nice part about this partnership too is because we're providing the custody solution or just providing the loan, you can have a really nice partnership in terms of sending Bitcoin to Arch as collateral. They're issuing dollars or USDC that can be sent right to the Onramp trade desk, right? Then dollars converted into BTC, BTC deposited into a client's Onramp vault. So all, within, essentially one service provider, two working together closely, a client can execute that strategy, where typically they're going to have to, pull together, a hodgepodge of different solutions and
then
go through a lot longer
yeah,
process.
Cam, we actually had a borrower to go one step further recently, where they actually then deposited the new Bitcoin that they purchased into the loan as collateral and then borrowed more against it. But you can do as well.
Something I've thought about.
Oh.
Well, we're at the top of the hour, so the timing worked out well. I don't see any other questions that we haven't answered already. So is this a good place to wrap up?
Believe so.
So in terms of getting in touch, you can certainly speak with us at either the Arch team or here at the Onramp team. If you'd like to speak with us at Onramp about either loans or anything else we offer, you go to onrampbitcoin.com and you can schedule a consultation right on the homepage. Otherwise, my email is cam@onrampbitcoin.com. And thanks for everyone for joining. I see a few familiar faces in the lineup here, so appreciate the questions and for people paying.
One more plug here. If you do want to use it, we'd recommend signing up with archlearning.com/onramp, or I believe it's /onramp Bitcoin, because then you'll get tagged automatically as an Onramp user. Yeah, it's archlearning.com/onramp Bitcoin. You'll get tagged as an Onramp user. You get the Onramp branding in the dashboard as well. And it just makes the service even easier. But even if you haven't, we've signed up without the link, that's fine. We'll tag you after the fact. And yeah, just as Cam mentioned, we're also very easy to get to. There's a chat bubble at the bottom right of any web page on the site. Send us a message. We'll get back to you within a few minutes. And as we mentioned, we communicate about our borrowers. So if you've asked Cam a question and you're asking me a question, we'll make sure that we align on that and make sure that your question is answered suitably.
Excellent. Well, thank you for the time. Appreciate it. And just reach out if we can help you out. Have a great rest of the evening.